So if you pull up a chart of the S&P 500, what you'll see is for 2023, it's returned 12.1% as of the 2nd of October. Now that's good. That's a strong performance for the S&P 500 in a year. But the whole point of trading is to beat the S&P 500. That is the goal. That is what every fund manager is looking to do. That's what everybody who's in the markets is looking to do. Beat the S&P 500, right? I'm going to put on screen, I'm going to pull up my account for 2023, okay? Because we have returned 21.4% for 2023, all right? 21.4%. So the S&P 500 has returned 12.1%. I have returned 21.4%. Almost double the performance of the S&P 500, right? So completely blowing the S&P 500 out of the water. Now, that shouldn't be a surprise to any of you guys who watch the channel, because you know, if you go back and you look at the last videos, everything that I've told you guys has come true, okay? All the predictions I've made, all the forecasts I've made about the markets, everything has played out, and I've just taken advantage of everything that I've told you. So it's no surprise that I'm performing so well, and I have a steady increase in that equity curve. As a matter of fact, today marks another year-to-date high, right? 21.4%. Guys, it's important that you don't try to move alone in the markets, okay? It's important that you don't just try to learn on your own, make moves on your own, because what's going to happen is you're just going to extend your curve to profitability. You're going to extend that time to profitability, and quite frankly, you may never actually reach it, okay? So it's important that you align yourself and you actually follow somebody who is able to achieve these types of results, okay? Market beating results. That is very, 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 very important. Don't try to do it on your own, because the chances of you actually succeeding doing that is very, very, very slim, okay? Align yourself with somebody who has years and years and years of experience in the game, and who's got the receipts to show that they're actually beating the market and performing exceptionally well. That's why I say you guys should join the Patreon, all right? The link for that is down below. You can follow every single move that I make. So where I'm sitting right now at 21.4%, you could be sitting at 21.4%, as opposed to a loss for 2023 or whatever it is that you have produced so far for 2023. Right? So make sure that you are aligned to somebody who is really doing exceptionally well in these markets. That is I can't stress that enough. And one thing about me, guys, is yes, I'm at 21.4%, and yes, I'm targeting 30% return for this year, but I'm always looking for funds who are performing even better than me, okay? Funds who may produce 40% this year, 45% this year. And that's exactly what I did last year. That's what I did the year before, and etc. Because then what I like to do is take little nuggets from these high performing asset managers. Now, don't get me wrong, there's not many that are performing better than me, all right? It's actually pretty hard to find any fund managers that's performing better than me this year, because the average for the fund managers is around 8% for the year, right? But nevertheless, if there is anyone that I could find, I'll pull little nuggets of, wisdom that I can, strategies, tactics that they have deployed this year, and then what I do is I bring them into my arsenal. Means that I perform even better than next year, right? Or I'm even more knowledgeable. And then those that are under me taking my guidance, they not only have that continual access to that acceleration in wisdom, acceleration in growth, right? So that's very, very, very important. Too many people are like lone wolves in these markets, and it doesn't yield any results, right? So that's a top tip that I've got for you guys. That being said, currently at 21.4%, you guys have seen me come on and produce, videos over the last couple of months, and you've seen how my predictions, forecasts have been spot on, but it's time to run it again. and let you guys know where the markets are going and what I'm looking to do to get me from this point up towards that, mid 20s in terms of return for 2023. All right, that 24, that 25% is the next target that I have on my radar. So to do that, what we're going to do is we're going to jump straight into the S&P 500, okay? Because one of the mistakes that too many people make when it comes to the markets is they tend to, what they tend to do is go straight to individual stocks, okay? So they'll go to a stock like Tesla or go to a stock like whatever, Apple, and then they'll start making trades on these individual stocks without having overall a bigger picture view. All right, without having a bigger picture view, it's impossible to trade in the markets just by picking an individual stock without having an understanding of the structure of the bigger picture. Okay, because the bigger picture will override the smaller picture, which is the individual stocks. That's very, 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 very important. I can't stress that enough. S&P 500 or the SPY right now is at 426. Guys, one thing you need to know about the markets right now is it's broken a key level of structure. The key level of structure was at 430. Okay, it broke that a few sessions ago. Currently sitting at 426. Now, because it's broken that 430 level, what it means now is it's exposed the market to the downside. It's exposed the market to that 420 level to 415 level, right? So that 415 to 420. It's exposed that level because at that level, that is where what we call a demand zone, okay? And in our demand zones is where we get typically a lot of buying pressure, okay? So it's going to be pretty tough for the market to move higher than 430, right? And it's exposed it to that lower level of 420. So the overall bias is more towards the downside. But here's the thing. The market goes through phases. We have upwards phases, okay, uptrends, strong trends to the upside, downtrends. But we also have these accumulation periods where the market chops around and it goes sideways. This is very important. A lot of people forget that the market has three phases and they only actually just think about the two phases, up and down. What you need to realize is the market hasn't had an accumulation phase, all right, a sideways phase since May. Since May, the market's gone up and come down in the last month or two. The market is due for that accumulation phase where it just chops and trends sideways. Very, very important. I wouldn't be surprised if in a month's time we're looking at the market and it's exactly at the same level it's at right now, 420, 425, because it is just chopped around and moved sideways. Why is this important? Well, because in these sideways moving markets, option buyers get fried, okay? Option buyers get torched like little pigs. So you need to understand that. You need to understand the three phases of the market and the likely phase that we're in right now. The market is due for a sideways movement, an accumulation phase before the next move up or down. That's very important, okay? So that's the overall picture. We're leaning towards the downside, but we compare appreciation to the fact that we're probably going to chop around. And we've pretty much started that chopping around phase, all right? Those of you guys who have been active in the markets, you've seen the markets being pretty choppy over the last few sessions, and the expectation is that continues, all right? So you can use that to your advantage in terms of how you go about executing trades and what trades you use and what strategies you run. All this stuff I'm telling you guys is the reason why I am double the S&P 500 in terms of performance, right? Because again, an understanding of the phase of the markets as well as that deeper level technical analysis. So we have a bias towards the downside, but not extreme. Okay, not extreme, but we do have a bias towards the downside. That being said, let's look at a couple of individual names where if they move to certain levels towards the downside, they become lucrative opportunities. All right, so that's how you do it. You start on the on the bigger picture view, and then you drill down to some opportunities of interest. First of all, let's go to SOXL. SOXL is a beast of an opportunity, is a beast of an instrument to trade. If you haven't made any money on SOXL this year, you've been absolutely sleeping and you've missed out big time. All right. Currently sitting at 1870. I think last time I spoke about SOXL, I said to you guys, it's going to move down to around that 18 level, and then you're going to get a movement up. Okay, so it did move down to around that $17 level, and then we've seen a pretty decent move up in the last few sessions, but we're forward looking now. And what the key thing you need to know at SOXL is we have a technical gap left at 1630. All right, it wasn't filled. It got close to it. It got to around that $17 level, but it wasn't, that technical area on the charts wasn't fulfilled, and it must get filled. So the likelihood is it gets filled probably sometime this month. Okay, that's the expectation. So likelihood is it's currently 1867, and we see SOXL at 1630. That's not to say that it happens tomorrow. That's not to say it happens this week, but that is to say it happens in the short term. Now, at 1630, if we are to see the SPY backtrack, remember, those of you guys who have been listening to me and haven't fallen asleep, if we're to see the SPY at that 415 to 420 level, and the SOXL is at the 1630 level, that is a lucrative opportunity, right, for entry to the upside, because at that level you're very likely to get an aggressive buying situation, right, where the SOXL shoots back up beyond 17, beyond 18, beyond 19, and probably gets into the 20s. All right, that situation is to play out. So that's what that is an optimal move that I'm looking for. All right, I already have a lot of moves on this, a lot of trades, a lot of positions on this that are doing very, very well, but that's the next move that I'm looking for it to get to that 1630 level. Let's move on to TQQQ. Now, if you guys notice, I've started off with two ETFs, right? SOXL, TQQQ, because the majority of your moves should be on ETFs as opposed to individual stocks, all right? ETFs as opposed to individual stocks. I would probably say 75 to 80% of my moves that I make are on ETFs, and then 25% of my trades are on individual stocks. And there's a very, very, very good reason for that, because ETFs are just not subject to those abnormal moves that you sometimes get in stocks based on fundamental reasons, right? So TQQQ currently sitting at 35.92. Again, higher, bigger picture view. Likelihood is we see markets move down. TQQQ also moves down. Where to? The 3150 level. Okay, 3150. Taking out that sell side liquidity accumulation around that $34 level that it put in a few, like maybe a week ago. Okay, drop down to 34. We see it take out that level, move down to 31. where it will act as trade entry. And at that point, it should be in line with the SPY at the 415 to $420 level. Okay. The market, you should view the market as like a story, all right? And when things start overlapping, when you get that alignment, okay, alignment in your theses across the board, that is when significant opportunities open up. So $31 for TQQQ is the next optimal entry for a long side trade. Even though it's at 35 now, don't be surprised. This thing can move very quick, right? If it could get to from here to 31.50, could literally take 1 or 2 sessions at some point in the near future, right? So these are the price levels that I'm looking out for, and these are the opportunities that are going to take me to the next tier of performance. Okay, get me to that 25% year to date return, 25, 26 and beyond. I'm going to finish up with Tesla, guys. We got Tesla. So individual stock to finish up with, currently sitting at $249. Now, if you pull up the charts of Tesla, this thing has accumulated, it's got this very perfect trend line, okay, that is created. And this trend line is concerning because it is basically built up a ton of liquidity across this trend line. The likelihood is it breaks this trend. It breaks lower and actually revisits that low point that it put in a couple of weeks back, which is around that 215, okay, that 215 to 220 level. That is my expectation, that it moves towards that level. And it's at that level, that's where I'm going to be taking long based positions, okay, to take advantage of the reversal in price, because I do think markets are going to go and put in a low, okay, around these levels that I've spoken about today, and then you're going to have aggressive move up in the markets. And if you're in position for that aggressive move up, that is how you are able to completely outpace the S&P 500 in terms of return for the year. Okay, so that is my expectation when it comes to Tesla. Going to break this trend, move towards that 220 level, and then move higher. Now, I'm not taking a short position on Tesla here. That's key, because right now it's actually a pretty suboptimal level to be doing that, because of, we know we're in an environment of chop, right? We know we're in an environment where we should see that accumulation in price. So why would you go ahead and take an aggressive move like that? You want to wait for an optimal entry point. You want to wait for an alignment in terms of technical positioning across the market. Then you can take entry. Then you can make a lot of money, all right? A lot of it's about timing. A lot of it's about timing in this game. But you guys have names of interest, you have price levels that are optimum, and you have strategies to take advantage of that. Okay, so that's what I've got for you guys in this video. All right, make sure you check out the links below in the video description, and I'll catch you guys very soon.